And let's switch gears here. And of course, earlier today we had a deluge of China data out this afternoon. Factory output growing faster than expected, but not so much. Retail sales and fixed income growth were a miss. And looking ahead, the tiger economy is expected to continue to lose steam and facing multiple challenges, thanks of course in no small part to property downturn, Evergrande defaults, you name it. Some in the market going as far as calling for growth to fall below 4% in the current quarter, although on an annual basis it's still 8%. Well, the Aussie dollar is defending a key 70.90 level on the back of that data. To take us through all of that and more in the little Fed meeting tonight, Pete McGuire, CEO of XM, is dropping in now. Pete, welcome to the program. Let's run through the China data. Did it really make any impact given what's happening tonight?
Well, I think it has, Annette. It's probably painted the scene that weaker than expected numbers and across a number of those sectors, and the property market accounting for 30% of the overall economy. So yeah, it hasn't been a standout. And then you've got the domestic consumption remains weak, and as you mentioned, a number of those, as far as retail sales. You've got the likes of entertaining and going out to restaurants and all of that sort of thing. With COVID numbers increasing, then people are staying home, so that's impacting consumption there as well.
Expect into the new year. I know we have that bit of a pause for the Winter Olympics. We've had a smattering of stimulus, but certainly nothing like the old days when they just build like crazy. Do you think that could be a drag on global growth in the coming year?
Well, I wouldn't be surprised in some ways. I mean, if you're looking at from an infrastructure side, it was a little bit slower than what we would probably expected. The other side, of course, is you've got inflation creating much turmoil with supply chain issues and just leading into where 22 plays from the ratcheting up of rates. You've got inflation running nearly at 5% in the Eurozone. You've got probably 7.5 to 8. And if you're in the last quarter across that across the US, so these are all impacts that the central bankers would be, I think, becoming fairly worried about, Annette, leading into Christmas and how those retail sales are going to be over the Christmas period. So yeah, there's many components that are going to add, I think, volatility to 2022.
It sure will. Well, let's head to tonight's elephant in the room. It's been fairly well discussed and analysed about accelerating tapering, paving the way for tightening. Where do you look when everything drops on your screen? What will you be looking for first, Pete?
US dollar index. I want to see that. That's a wonderful barometer for us, Annette. That really creates, I think, the storyline. We're at 96.5, so it's had a nice rally to the upside. I'm not too worried about, the equity markets. They're just, we haven't seen anything dramatic happen. So I'm just seeing what happens as far as US dollar index. There could be a little bit of movement there as far as the currency side, and that will tell the story over the first, 15 to 20 minutes of trading, I think. And then you'll get an indication where the equities play after that, what happens as far as bonds and what happens as far as euro cross rates. Have a look at what happens with the Swissy and possibly even oil and gold.
So King dollar comes first. What will move the US dollar? Will it be a shock dot plot?
It could be a shot, yeah, that would certainly do, that would create a fair bit of movement, I think. We're edging up ever so closer to that 97 handle, and we could be there by Christmas. I'm not putting anything out there, but it just seems to be upward at the moment, very strongly bid up. So there's the first side of it. Leading into 22 as far as rate rises, when's the first cab off the rank and how, in what successive months do they play those out? So there's that side of it. The second bit, are we going to see a continuation as far as the Santa Claus rally and net leading in over the next, say, 7 trading days up to Christmas? Or are we just going to, whipsaw around at these sort of numbers at the moment? So I think that's where traders are looking. I've seen crudes come off a bit. We're under $70 for WTI. So it's had a bit of a push down, and there's probably $1 or $2 to be made out of that as well.
Well, I can think of a couple of other central banks that would love the US dollar to be bid, because we know Bank of Japan and the Swiss National Bank never like that risk-off trade pressuring their currencies. Do you think they'll be quietly hoping that the Fed leads the way so they can continue to take a back seat?
I think so, very much so, and that's the major concern, very much impacting Powell, and where their thoughts are would be, no doubt, the inflation story. And are we going to be in double figures by February or March? So that's the scary number, and they've really got to think, well, how do they contain that? So the other banks will follow suit to some sort of, I think, raising of rates. But I think the US is going to get the first big jump into the pool, and they'll be, battling forward and with a couple under their belt before the others add to that sort of mindset, Annette.
And of course, I know I keep saying Bailey's the unreliable boyfriend, but let's face it, the BOE hasn't done a great job of communication in recent weeks. Is a December hike off the table?
I think so. I truly do think so. I think they've got the COVID numbers. They've got other points of concern affecting the English economy or the UK economy. So I'm not expecting any surprises there and anything to really, from where I'm sitting at the moment, I'd have to say, no, I can't see it happening, but who's to know? You know what central bankers are like, and they can do whatever they really want to do. But their inflation story is certainly a concern for them, but I think they're waiting to see what Big Brother does as far as the Fed.
And let's talk about little brother, the RBA and the Aussie battler. As much as the RBA doesn't really like to communicate about currency levels, I'm sure they're happier to see 70 rather than 80 as we saw earlier this year.
Well, exactly right. And it really pushed down very quickly. It hit that high and everyone was saying, is there an 82, 83 handle? And then all of a sudden, boom to the downside. And we hit 69.9 odd last Monday week. And here we are now just under 71. So it's been quite volatile over the last week and a bit. Great for traders again, plenty of movement. And there could be a little bit further upside there leading into Christmas. We've just got to see what happens as far as the Fed and the Aussie, maybe a little bit of movement there. I think it's going to be whipsaw. I think it's going to be volatile. So that's a good thing for traders as long as they're on the right side of that.